Imagine a world where one family, through their financial prowess, could control the fate of nations, a world where the flow of money determined the ebb and tide of power. Welcome to the late 15th century and the epicenter of this financial universe, the Medici Bank. The Medici Bank, founded in 1397 by Giovanni de' Medici, was not just a bank. It was an institution that transformed the economic landscape of Europe. At its peak, the Medici Bank had branches spread across Italy, France, Germany, Spain, and Hungary, with assets totaling over 500,000 florins, a staggering sum in those days. But how did this Italian banking dynasty reach such dizzying heights? The answer lies in their innovative business practices and strategic partnerships. The Medici Bank was among the first to use double-entry bookkeeping, a method that allowed them to keep accurate records of debits and credits. This revolutionary approach gave them unparalleled insight into their financial health, setting them apart from competitors who were still relying on outdated accounting methods. Moreover, the Medici Bank shrewdly aligned itself with powerful political entities of the time. They financed popes, kings, and queens, becoming the go-to bankers for royalty. This strategic positioning allowed them to expand their influence and consolidate their wealth. However, as we will explore in this episode of The Money Trail, every empire, no matter how mighty, eventually falls. And so too did the Medici Bank. But before we delve into the circumstances leading to its downfall, let's first understand the magnitude of its influence and the scale of its operations. Remember, the Medici Bank wasn't just a financial institution, it was a power broker in the Game of Thrones that was medieval Europe. And like all great powers, its story is one of rise and fall, of ambition and hubris, and ultimately of lessons that echo through the annals of financial history. The Medici Bank, a cornerstone of the Medici family's power, was not merely a product of its time, but a trailblazer in many financial practices. Its success was built on a foundation of innovative strategies that would lay the groundwork for modern banking. One such practice was the use of double-entry bookkeeping, a method meticulously detailing both debit and credit transactions. This system, invented by the bank's mathematician Luca Pacioli, allowed for precise tracking of assets and liabilities, a revolutionary concept in an era where financial mismanagement was commonplace. Another key factor in the Medici Bank's success was its extensive branch network. With outposts spread across Europe from London to Bruges, Florence to Rome, it had an unparalleled reach for a medieval bank. This broad geographic footprint enabled the Medici to tap into various regional economies, diversifying their income streams and mitigating risks associated with dependence on any single market. Moreover, the Medici Bank excelled in facilitating large-scale transactions, often acting as intermediaries for international trade. They financed ambitious projects like Pope Leo X's renovation of St. Peter's Basilica and even funded explorations seeking new trade routes. These high-stakes ventures required significant capital, which the Medici could mobilize due to their vast resources and influential connections. However, it wasn't just about size and scope. The Medici also demonstrated acumen in managing risk. They developed sophisticated lending practices, including collateralization and loan structuring, that minimized exposure while maximizing returns. Furthermore, they were among the first to utilize bills of exchange, negotiable instruments facilitating funds transfer without physical gold or silver movement, a precursor to our modern-day checks and wire transfers. Yet, despite these advancements, the Medici Bank would eventually collapse under the weight of its ambition and mismanagement. As we delve deeper into this story, we'll explore how the very practices that propelled the bank to greatness ultimately led to its downfall. Stay tuned as we continue following the money trail. As we follow the money trail, it's crucial to examine the early